Here we go. Okay, the perfect timing. Thank you so much. All right. So the reason this is called 3 years and not 2 years, because you're only seeing 2 years here, is they count the startup period as a year, which makes sense when you're starting up. And I'll go back over that in a second. So we have 1, 2, 3, and an income statement. Those are the basic pieces of this cash flow forecast. Now I'm going to go and dive into each one and explain what goes into the various ones. The first one is something called past purchases. So for those of you who already have a business started, you can ignore this. Do not do this. For those of you who are just starting, the important thing is you have to pick a year. And what that means is you have to pick a start point for a year. So let's say you say January 2026 is your official start year, because for the purposes of this, you can't, like, you really have to pick a starting point. And there's a good reason for this from an accounting and tax point of view as well, because everything you bought for your business before that official start year, and if you register your business, they'll ask you what your fiscal year is, then can qualify as a deduction even when you weren't doing business yet, even though your business hasn't started yet. So here's an example. Let's say you haven't officially started your business, but you took a 6-month course in how to create AI code for business people. I'm just making this up as a way of getting to your business, but you haven't started it yet. And maybe that course cost you $2,000. Well, you don't have a business number yet. You took the course without registering a business, but you haven't started a business yet. But because you paid money a year in advance of starting your actual business that related to your business, you can count it as a business related tax deduction. So the other reason banks and other people want this sheet is so that's a tax reason for doing this, because you can then list out the things it makes you think about what you already spent on starting your business before you actually start it. Now, again, if you're already operating, put that aside. But the other thing is that banks and other lenders like to see what skin in the game you have already put in. So when they see zero here, just strategically speaking, they'll say, well, you haven't invested anything yet. You have a start date, everything's future forward, you need this amount of money to start, and this is what your cash flow looks like. But we don't see any evidence of you putting in anything prior to this. So that's two reasons for this. Yeah, Lauren?
Yes, what I was gonna say as well too is, for example, if you have like a website and you sign up for like a 5-year subscription and you're taking a course and that course is, let's say, 3 years long, because some of the programs, you know what I mean, like degrees or
Mm-hmm.
whatever, and it's going towards what you're working towards, what a lot of businesses, should do is instead of writing it off in their first year or their second year, actually put it off in their third year so that it reduces their taxes. For nonprofits, I mean, it doesn't really matter. But I know for regular businesses, you don't actually have to start, getting that GST, HST tax number until you're over, like, I think it's, you know
30,000.
what? I'm gonna say 30.
Yeah.
Yeah, I was gonna say, like, I was gonna put it lower at 20 just because I was like, I don't remember what the number was, but there you go, 30. So for that reason, most businesses actually do not, fun fact, do not make 30,000 in the first year. So it's actually best to put it into your second or third year. Normally businesses actually take off on the third to fifth year.
Yeah, that is so true. Thank you, Lauren. Thank you so much. So, yes, absolutely true, right? Which is why we want to evaluate your business over more than 1 year, because it's not really, it's like reading the intro without actually getting into the meat of the heart of the matter. So, absolutely true. And there's lots of tax things you can do to deduct expenses and even lost years. I won't get into tax stuff too much here, but even lost years are a benefit to you, because if you register your business, you file your taxes, and you lose money, then later when you're making money, you can carry forward those losses for 7 years. So if you lose 3 years, you're losing money on the register, and then you start making money in year 4, and year 5, you're making a lot of money. You can reduce, like, basically deduct get your taxes down to zero by, or whatever level you can, by deducting your losses in future years. So government allows you to say lose business for 7 years, and then when you're making money, use those losses to reduce your taxes. But anyway, let's not go too much into tax. This is the first one. The second one is the startup costs, which I had you think about before the break. Now, the way this spreadsheet works, and other ones may be similar, there are certain things you can change and some things you can't. Everything in green you can change on this particular spreadsheet. Okay, so now these things here that they have office space, these are suggestions. They aren't in hard copy. So they do have, startup, the startup cost, the framework, and the thing you want to write down is, what do I need to start day one on my business? Let's pretend it's January 1st, 2026. There are certain businesses that cannot start unless they have a bunch of pre-spending. For example, I'll use the food truck. You can't sell food from the food truck unless you actually have a truck. So this would be the kind of expense that would go in here. If it's a lease, we would put it in the other one because it's not but if you're buying the car outright, or prepaying a lease for 12 months or something like that, then you might put it here. Other examples, a computer, your logo, we talked about some of these already. Search costs, business registration costs, anything you need to start anything you're planning that you're going to say to someone, I need this money to even get to the starting line. So a bank or a lender, if you are going that route, or just personally, this tells you how much money you need to even just start. So I think someone here is starting a cleaning business. So, if I use that as an example, what do you really need to start to even do the first place? It depends on your model, right? If you're using the bus to kind of get to places, you don't have to worry about transportation. But if you say, I can't do this business unless I have a car, then you're going to have to put a car in your startup costs, because it tells the bank and yourself that you cannot start unless you make this investment. So that's what goes in there. Most entrepreneurs have a very short list. Okay, 3 or 4 items, that kind of thing. So don't get too caught up in how many there are here. These are just suggestions. Like I could easily change equipment to car. Okay, I'm buying a used car. Oops, there we go. Sorry, edit workbook. File conversion. Oh, why does it do newest? Oh my gosh, that's my my thing on my computer now. There it is. So startup costs, right? So I can change this to car, for example. Okay. So all I want you to do here in these first 2 ones is think of any past purchases from pick a starting line, if you don't already have one, and figure out what your actual getting to the starting line costs are going to be. And that's it. Now, inventory, stock, and products is only if you need inventory to start your business. Okay, Farah, I'll get to you in a sec. If you, for example, are again with the bonsai business or something like that, and you need to buy in bulk, it's good for you to buy in bulk the containers for the bonsai products that you're selling. Or if you are a t-shirt vendor and you're making custom t-shirts with screen printing, you may have found a deal where you can get 1,000 t-shirts for $35. Well, you might just do that as part of your startup costs and put it into your inventory here. And that you put it there because it's going to become part of your cost of goods further down. So, but 90% of you, based on what I know about your businesses, will have nothing here. Okay. So the next one is your cash flow. And Farah, before I go on to their question.
Yeah, just a quick question. Just going just briefly back to the past purchases area.
Yeah.
I operated my business without being registered because I didn't make that $30,000 that someone was talking about earlier. So I didn't have registration, and then when I moved to a new company, they were like, either way, you needed to be registered, right? So I don't think I went back and I did a proper list of all my spending during the time that I was not registered, which was like about 2 years ago. So can I go back to that for the past
So my answer would be, and then other folks here chime in. So my quick answer is check with your accountant. Typically, they don't let you go back more than a year.
Okay.
But it depends on what it is and how aggressive you want to be with your accounting filing.
Oh,
Sometimes your accountant will say, do you want me to try? And then if and then, if they say no, then they say no. But and anyone else have any answers for Farah there? Okay. So, all right, I'll move along here. So the next 2 years, the next two pieces of this cash flow forecast template are the same. And so what it is here is you're going to do the start year one, like they basically, your month one can be any month. Okay, it can be like in this particular example I created here, it was July. And so month one is July. And this particular example is someone who started an artist video package, discounted, full price, marketing consulting hours, and they didn't do anything for the third one, so I could just erase that. So essentially what you're going to do is forecast your sales for the next 2 years, starting with a month. And the reason you want to do it month by month, and here's advice, don't just take 1 month and smear it across the 12 months because business is seasonal. And some of you will sell most of your stuff in especially if it's product in holiday seasons. Some of you will be Deadsville in the summer, in December and January when nobody's spending money. So, or it may be if you're running a winter resort, that will be your busiest time. So it allows you to think about seasonality for your business. So you'll want to do that. So I put in some numbers here, just to as a model, and then the spreadsheet automatically then populates that on the next year as well. So you don't have to type in what you're selling, 3 times, 4 times. Then you're going to put, and this is really important, the average price of the sale. If this was a real business, like a full-blown business cash flow forecast, like for example, if I had my dairy, I had sales assumptions by SKU. Basically, if we had 22 products, I'd have 22 lines there and 22 prices. We don't want to do that because this is a model. We just want to get a high level point of view. So if you have more than 4 SKUs, I'm going to recommend that unless you want to go all the way and do every single item, you can. Not on here, then you have to use the other spreadsheet I'm going to give you. But I want you to keep it high level and not be too slavish about it and then I would put things like, products that are between $10.99 and $20.99, products that are between 50 and like just groupings. Okay, groupings of products, just to give you a high level view. So clothing manufacturers usually have trouble with this because they have a lot of SKUs, or if you're doing artisan foods, you may have a lot more. Just put it in buckets to make this a quicker exercise than struggling over how much should each be and all of that stuff. You can, but I'm kind of saying that's why they do only 4 lines here. And then, of course, you have to type in the average sale. So for product number 1, which is my artist video package at a discounted rate, I'm only going to charge $150 for the package, which in this example was an entrepreneur who was going to basically give you a 2-minute video for your business for $150. They were going to do a business for that. That was their idea. And then they had a full price version, which was $750. And then they had a video package plus their marketing and consulting support at $1,000. That's what they wanted to do. And then they figured out, okay, I'm only going to sell 2 packages in my first month because they're starting in July. It's the summer. And then they predicted, how many packages of various and sundry things they're going to sell. And you can see here, based on their pricing, the spreadsheet populates, and they would make only $21,000 if they did it this way. Right? So anyways, you'll be able to go through and see what your sales are. The funding sources, I'm going to suggest the yellow ones come over from the other sheet, which are basically to say how much, because we're talking about cash here, not a budget. So what this piece brings into line is how much capital were you able to, capital is another word for money as a way to think about it. How much money were you able to raise that you have in the bank for your first year? So it would put it in here. Now this entrepreneur said he had no loans, no credit, no nothing. he had $650 in the bank to contribute, which is not him paying himself. This is money in the bank he has to have start this business. And that's all he had. So that's all the numbers that goes in there. And then we've got below that inventory cost. Well, this is a digital business, so he has no inventory. And then below that, we have our expenses. So the green things are things you can change. Again, he only had telephone and internet, business insurance, credit card transactions, which I think he was low at 2%. And it doesn't have to be just credit card. It can be payment systems percentage. I would put anywhere between 5 and 10% if you're selling online. But that's, not telling you what to put there. So this is where you put there. Now, one category I want you to pay attention to is owner's salary, owner's draw. This is what you're paying yourself every month in your business. Now you can have, he had nothing, obviously, because he said, I can't pay myself because there's not a lot of money in here. But he still could. So I'll explain why we do this. A lot of entrepreneurs don't pay themselves. And then they say, oh, we're profitable because there's money left over at the end. See this here? These are my expenses. That's why I like using his case study. So he did this and he said, we have $22,000 in sales, but look, my expenses are only $1,500. Woohoo! I make $19,000 that year. But he needs to put in his own owner's draw along the way. And here's why. Everybody's got rent to pay, right? I'm going to say on average in Toronto, you probably have to, I'll be even less bullish on that one. I'll say food, rent, and housing for this person is what he needs to draw out of the business to get to be okay, to have his enough number. Why is this taking so long to paste? Maybe I have to. Okay, so let me put that in there. Copy, paste. So this was his enough number. He said, I need to earn, and I do not know why it's not pasting. Okay. And that's probably something on my end, but I'll just put it in here. And so remember you all said you have to earn a certain amount to make this worthwhile. Well, if you can afford not to pay yourself for a year, that's okay. But again, you need to know that you're working for free for a year. And that's not a business. That's a hobby. Okay, so let's go over here. So let's say this is what he needs to just pay rent and to live. So suddenly his business now is losing $22,000, right? Because he's paying himself. So the way I want us to use this cash flow as a model is to say, and of course in year 2, he hasn't put in his numbers yet. Presumably he'll sell more. So maybe in year 2, he'll break even. And he'll fill in the same 3,500. Maybe rent has gone up, so maybe higher. He still has the same package. Maybe he'll increase his price and he'll sell more units, and ultimately he will be more successful. It has the red numbers here because it's pulling over from the previous year. But if in the second year he still has this kind of expense and he still needs this kind of money, he's got to sell at least $22,000 more in year 2 than he did in year 1. And then he's going to have to look and say, how reasonable is that? Because he might say, well, I can only do so many projects a month. That's all I can do. Then I would say, you're underpricing, the packages are not well conceived. You need to figure out how to come up with a business model that actually helps you. So get you to what it is you need. And again, it doesn't have to be the first month. So for year 2 is empty here, but know that any changes you make in green on year 1 will move over to year 2 without you having to redo it. And let's look at the income statement now. So once you've done all that work and filled it out, then it's going to show you your income statement. And so for him, because we don't have year 2 yet, it basically summarizes it. But the other nice thing about this one I like is it also calculates your tax. Now, there are lots of deductions, and so this is a generalized things, but banks like to calculate in the fact that you're going to take, again, this is for, this Futurpreneur is a bank. So they want to kind of say, well, you're not actually having $22,000. You actually, after you pay your estimated corporate tax or personal income tax, if you're not incorporated, you actually only walk home with 17. So they will lend on that basis, right? In this case, you're minus 17, so they won't lend you anything. But that's why I like this one, because it actually reminds you that the money your sales is not your income, right? Your income is a separate bucket, and every entrepreneur who makes money from their business pays personal income tax on it. Now, there's lots of strategies for how to lower that. There's not a course in tax. We can talk about that in after class stuff. But yeah, that's what a lot of entrepreneurs forget that part, right? You don't take home what your sales are. You take home what you decide to take home and then pay tax on that. So that is basically how this works. And then if I were to say to this person, well, this isn't going to work. Now, let's say if I change something, though, let's say he had $6,000 in savings that he could use to fund his business. If I now go into year one, you'll see it should be 6,000 in here. He has less of a loss because he already has, did it come across? Did that 6,000 come across? Yeah, it did. So basically now he has $27,000 in cash. He's got money from sales and he has money in the bank that he's using to start his business. So his losses are a little bit less at the end of the day. So, and if he had $20,000 to start, he wouldn't actually have any losses in the first year, because he would be basically living off his savings while his business gets going. Okay, I'm going to pause there and do some questions. Yes. Oh, thanks, Fair. Thanks, Kadir. Yes. Yes, 3 years is minimum. It really is, because you can't, if we're doing this, again, lots of cash flow courses and stuff focus on 1 year. Like if you actually are doing business already, you always want to have cash flow as one of your standard kind of financial analyses you do, just to see when you'll run out of money, if you ever run out of money. Everybody does that, for 20 years, you have a cash flow forecast. But this tool is to help you model a better business model, because now I can go back and say, here's, for example, I can say, okay, what if I charge $250 for this and $1,000 for this? And what if I charge, I'm just going to make this up, $5,000 for my special package? Well, now he's got $47,000. His needs are 42. He's got few expenses. He's actually got a surplus. And of course, we still have to include the fact he has $6,000 of extra money in there, if that in fact is calculating properly from the startup costs. Yeah, it should be. So yeah, I have to put that here actually. We'll get into the details of that. So yeah, so he's actually got a surplus. So you see how that works? So you can kind of then say, I need to change my pricing. I need to readjust my sales. Now here's a couple of other insights you can get from doing this. Some of you will realize when you're doing, especially product people, you'll realize, oh my gosh, I got to sell a lot more units than I thought I did. And then you realize by year two, if you are selling, 40 units or 100 units to make your enough number. I had someone doing masks, do you remember, with COVID? And they were sewing masks. And in order to make, like pay themselves, forget about profit, that's after you pay yourself. In order to pay themselves, they would have to produce 1,000 at the pricing they wanted to do. They would have to produce 1,000 masks a month. And then they realized they don't want to work, like they don't want to sew 1,000 masks a month. And then they decided they're going to change their business model because they didn't want to do that. And the other way to do it was to hire someone to work with them and come to their house and also sew also sew 1,000 masks a month. So this helps you think through your business model. That's how we're using it. And for banks, they just want to know if you can pay back the loan, which is why they're looking at cash flow, especially if you have no collateral to put up. Okay, so I'm going to stop there. That's essentially the whole purpose of this spreadsheet. And so your homework would really be, and by the way, on as we round out, Thursday night is our mentor night. You'll be in small groups. And what I'll be doing is organizing you according to what you want to work on. Some of you may still be working on your business idea and saying, I'm struggling between a couple of ideas. one way to sort out which idea is better for you is to do this with each of your ideas. That's one way to maybe think about it. Say which one could earn better money. And I see you there, Deline. I'll get to you in a second. The other way is some people might want to work on defining their customer avatar. Some people might want to work on still getting their business model canvas kind of figured out so that they can better articulate what their business idea is about. And also make sure, I'll just make this comment, one disconnect I've often seen when people do this is in their business model canvas, they will talk about marketing, but they won't really put a number on what it costs to market. And then when they put a cost on it in their cash flow forecast, they realize that marketing costs way more than they thought it would for the type of business that they are planning to build. And that would be a chance then to kind of go back to the business canvas and say, you know what, we're not going to spend money on this to do marketing. We're going to change it because I learned through doing my cash flow forecast, actually in year 1 and 2, I can't afford to do TV ads, that kind of thing. Deline.
Thank you. Really appreciate you acknowledging me. At this point, I am going to have to step away. But I'm making a formal request. It's not I don't have a question, it's a request that this be available as soon as possible because I will need to prepare moving forward. I know we're waiting on some other recordings, but this is a cry for help. And if possible, when you do the after party, if the persons there aren't too opposed to it, if you could record that as well. I usually stay. This one sounds like it would really be a really good one, but I'm literally going into a meeting at 11:30 and I'd love to hear what's going on there. I thank you so very much.
Thank you, Deline. I'll certainly ask the question of the after party part. And Katisha, I'm pretty sure we can get, usually the recording's available 10 minutes after Zoom closes or something like that. So I hope we can put that up as soon as possible. Thank you. And all right, so I'm going to address a couple other questions here. Should you add higher costs for expenses to cover unexpected? Chelsea, that's called like sort of, I would prefer you put a miscellaneous line in, and because I wouldn't, to cover, if you're estimating, because you don't know your cost yet, it's always good idea, in my humble opinion, to go higher, like to err on the side of more than less. That's what I would generally say, but don't add higher costs for expenses to cover unexpected. I mean, so you can estimate higher, like if you're not sure, but that's part of the work too, is do some research, right? You can type in, how much is business insurance for this type of thing? Even on AI, they'll give you, they'll give you some level of quotes from various insurance companies to give you a ballpark. It might not be the number you're going to be spending, but based on your unique circumstances, if you talk to an insurance company, but you could also talk to an insurance company, phone them up and say, what would my estimate be? That's part of the exercise here over the next couple of weeks too, is to kind of do that, get some quotes. But yeah, you can do estimates, estimate high. I always do, like on the higher side. You can always add a miscellaneous line as well in expenses. Some people do like $100 a month or something like that to cover things that are on things you can't predict, as a way of just noticing that. And when a bank or anybody sees miscellaneous, they know it's just cushion. They kind of see it as cushion. Does that help? Okay. All right. So we're at 11:24. In terms of next steps, so you give me a little bit of like after the after party, I'm going to need a little bit of time just to clean up that other spreadsheet. So I'll put up the bare bones one. It doesn't have a lot of the pre-pops in there and all of that, but that might be easier for a lot of people. I'll find the RBC one as well, or if Lauren, you happen to have a link to that, that would be fine. The general thing is they all generally, when it comes to startup funding, they all do need more than 1 year. And they also want, they want this kind of information because it helps them determine whether you can pay back the loan. And that's why they want it. Why you want it is to figure out whether your business model makes sense. And if you are going to take a loan, one thing I'll mention very quickly is under startup costs, you'll see up top here funding sources. And what they have built in here, they put in their own, it says owner will contribute. This is what savings you have. So you're going to put that in here somewhere, and you have to actually specify what you're putting your owner savings to. You could just say miscellaneous and put it down here. Let's say you do get a bank loan. So owner contributes, okay? The cost of the item is $6,000. Oh, I put it in the wrong place. Yeah, the cost of this is $6,000, but let's say in this case, the owner is going to pay the $6,000 for the car. Okay. If you do get a bank loan or you're looking for one, they will ask you, what do you need it for? So you might say, I need it to cover all these other things, but they will ask you if you're using their templates to actually put it down, like cleaning supplies. I'm just going to make this up. Cloud license, $500, website hosting, 250, let's say, oops, not 25. Logo design, 500. I'm just making all these things. Nuance cost, $13. So basically what they're asking is, how much do you need from us to start up? And if I did it this way, I'd be asking them for $24,663. If if you can't get a bank loan, then you might be using your credit card. So you would put all these numbers on the credit card side instead of on a bank loan. I would move it over there. If you don't plan on going for a bank loan and for some reason it's not letting me move on, it's just my computer thing for a second.
Or
Just
using your credit cards, you might want to add the interest fees as well,
Yes,
because they do get
absolutely.
crazy.
22%, right? Usually. So absolutely. Credit cards, the only thing good about credit cards is if you already have credit cards, you can use them, but it's the most expensive credit you can get. And, as a general financial suggestion, I'm sure all your financial advisors advise the same thing, that credit cards should be the last resort. Unless you can, now again, with your cash flow, if your cash flow can cover your, paying off your credit card every month, then maybe that's okay. Lots of businesses start with credit card funding because they can't get a bank loan. Then there's other funding, like friends and family, Futurpreneur, or bank loan is kind of covered under here. Friends and family, win the lottery. I don't suggest that one, but this is where you get your how much money do I need to start before I even go number, and a bank will always want to know that, and you want to know that. And then there's your operating costs. How much money do I need to operate? And one thing I didn't mention, I mentioned quickly, notice how here all the numbers are in the red? That means that at the beginning, like month 2, based on low sales and the need for rent, etc., this person is in the hole $6,000 that month. But then over time, it generally comes down because sales are increasing. See the curve there? It goes like this. But that tells you that you need enough float money to carry you for the first several months until it starts turning around at the very last month in this case. That's when it turns around. So that tells you that in order to make this work for you, you need to have, if I were to add this all up, a float of a significant amount of money, almost $20,000, in order to float this business in the first year. And that's the other kind of information you want. Okay. All right, so I'm going to stop sharing my screen, and thank you for being here today. And if any checkout comments or anything like that, let us know. And we'll see you on Wednesday with how to protect your business. I don't know, Katisha, do you want to mention anything about that, or before we move on to the after party?
Yeah, sure. So for Wednesday, we'll have a guest speaker. Her name is Janice. She's very experienced and a great speaker. So she'll be guiding the session for that day. So she'll be there. It'll be a really great session. I do encourage all of you to show up. And you'll also see Janice again in some other sessions that we'll have. I believe she'll also be doing 2 more sessions this cohort as well. So stay tuned for that. We'll be posting a bio about her as well on Mighty Networks and any information that you need to know prior to the session.
Great. Thank you so much, Katisha. And I won't be there because I unfortunately have a talk to give. So there won't be an after party that day unless Janice wants to or Katisha wants to do one. But then I will see you again on Thursday night at our mentor night, and we'll have a chance to continue working on this. All right, so thank you for being here today, and I hope this was a useful start to your Monday morning. Hopefully the laughing yoga made you smile. Maybe you'll want to play that for your kids somewhere, and it'll make you smile. And we'll see you Thursday night on my end, and the after party is now officially open. So, and I see Gadir having her hand up. I'm going to try to do this again. If you have questions for the after party, maybe you could put them in the chat so I could kind of see what groupings we have and maybe take personal ones off center, and then you know, that I don't know. We'll have to see what kind of questions we've got. So I'm going to ask you roughly what your question's about before tackling them, in case there's any overlap.
My question is not for this. It's more so mentor night. Is it in person and also the guest speaker, or are they also online? Just
They are
want to double
also
check.
both online. Mhm.
Oh, okay. Thank you.
It's online. Thanks, Baron. Gadir and Cecile, just give me a rough overview of what the questions are.
The meeting's still being recorded.
Oh, right. Oh, we
I
should.
put it.
Well, let me just ask about